Welcome to the deep dive. Today we're going to do a deep dive into Morgan Stanley
Okay.
to see if it might be a stock that aligns with your investment goals.
Sounds good.
So we're going to examine the firm's history and financials, market position, and even its impact on the broader economy,
Right.
all to help you decide if Morgan Stanley deserves a spot in your portfolio.
Yeah, that's right. We'll sift through company reports, market analysis, and news sources to
Right.
get like a comprehensive picture
Yeah,
of Morgan Stanley's current state and potential future prospects.
absolutely. So to kind of set the stage, let's rewind the clock a little bit.
Right. Okay.
Morgan Stanley's story began in 1935, born out of the Glass-Steagall Act,
Mm-hmm.
which forced the separation of commercial and investment banking activities.
Right.
And right from the start, they demonstrated their expertise capturing 24% of the market in their first year.
Wow.
They continued to grow, marking a significant milestone
Yeah.
with the 1997 merger with Dean Witter Discover & Co., which broadened their reach into wealth management and credit cards.
Yeah. This merger really shaped Morgan Stanley into the financial powerhouse we know today.
For sure.
So fast forward to the 2008 financial crisis.
Right.
They faced challenges like a lot of other financial institutions.
Yeah.
However, a critical $9 billion investment from Japan's MUFG
Right.
helped them weather the storm.
Yeah, and that story about the investment being delivered by a physical check
Yeah,
due to a bank holiday is pretty fascinating.
it is.
It really highlights the urgency and intensity of that period.
Right.
So now jumping to the present service, Morgan Stanley holds a commanding presence in the financial world,
Uh-huh.
ranking 61st on the 2023 Fortune 500 and 30th on the Forbes Global 2000.
Okay.
Looking at their financial performance, Zacks Investment Research provides some valuable insights
Yeah.
through their value growth and momentum scorecards.
Okay.
And these cards reveal that Morgan Stanley receives a C for a D for growth, and an A for momentum.
Interesting. So what does that mean? So that means that while their stock isn't significantly undervalued right now,
Okay.
it does exhibit strong price and earnings momentum,
Right.
which could be a positive sign for short-term investors.
Got it.
However, the D for growth suggests that their future earnings potential
Yeah.
might be lower compared to competitors,
Okay.
making them potentially less attractive for growth-focused investors.
Makes sense.
So let's shift our focus to Morgan Stanley's market share,
Okay.
specifically their dominance in wealth management.
Right.
In 2009, their merger with Citigroup Smith Barney created Morgan Stanley Smith Barney,
Right.
which at the time was the world's largest wealth management business.
Huge.
This move solidified their position as a key player in this sector.
For sure. And, it's not just their size that matters,
Right.
but also their forward-thinking approach to technology.
Yeah.
Back in 1962, they developed the first practical computer model
Wow.
for financial analysis.
Really?
So that shows their willingness to embrace innovation to maintain a competitive edge. Absolutely.
Yeah.
And this commitment to technology has likely contributed to their successful expansion in recent years.
Right.
Speaking of expansion, Morgan Stanley has been strategically acquiring companies
Yes.
to further strengthen their offerings.
Yeah.
So their acquisition of Solium Capital in 2019 focused on managing employee stock plans.
Okay.
Then in 2020, they completed a major deal acquiring E-Trade,
Right.
the largest U.S. bank acquisition since the 2008 financial crisis.
Wow.
And their acquisition spree didn't stop there.
No.
In 2021, they acquired Eaton Vance,
Okay.
a global investment management firm.
So these acquisitions signal a clear focus
Yeah.
on expanding their wealth management and investment management segments,
Okay.
allowing them to tap into a broader client base
For sure.
and offer a wider range of services.
Yeah, this brings us to their diverse services business,
right.
which is structured around three primary segments:
Okay.
institutional securities, wealth management, and investment management. And each of these segments caters to different clients and provides a unique set of services,
Mm-hmm.
contributing to Morgan Stanley's overall revenue streams.
So their largest revenue generator is the institutional securities segment,
Right.
which serves large institutional clients
Yeah.
like corporations, governments, and other financial institutions.
Okay.
And this segment offers a wide range of investment banking services,
Yeah.
including capital raising mergers and acquisitions advisory and trading in various securities
Right.
like stocks, bonds, and commodities.
Okay, so then we have the wealth management segment,
Right.
which focuses on providing personalized financial advice,
Yeah.
investment management, and brokerage services to high net worth individuals and families.
Okay.
Essentially, it's where Morgan Stanley acts as the trusted financial advisor
Right.
to affluent clients.
Got it. And lastly, the investment management segment
Yes.
offers a diverse range of investment products and services,
Uh-huh.
including mutual funds, exchange-traded funds, and alternative investments, catering to both institutional and individual investors who are seeking to grow their wealth
Right.
through various investment strategies.
So now, to better understand whether Morgan Stanley aligns with your portfolio,
Yeah,
it's essential to delve deeper into their financial performance
right.
and assess their valuation.
Okay.
Looking at various metrics can give us a clearer picture of whether the market is pricing Morgan Stanley fairly
Uh-huh.
relative to its earnings assets and growth potential.
So the price-to-book ratio, or PB, stands at around 1.18 for Morgan Stanley.
Okay.
This indicates a slight premium compared to its book value,
Right.
suggesting that investors are willing to pay a bit more for the company's stock than its net worth on the books.
Okay. What about their price-to-earnings ratio, or PE?
Their PE ratio currently sits around 9.48,
Okay.
which is reasonably in line with the market average.
Right.
While this doesn't immediately signal whether the stock is overvalued or undervalued, it's important to consider this metric within the context of their growth prospects and overall market conditions.
And we know from their Zacks scorecard that their growth score is a D,
Right.
suggesting their earnings growth might be slower than some of their peers.
Yeah.
This could potentially explain why their PE ratio isn't exceptionally high, despite their strong brand and market position.
Okay.
However, to get a complete picture, it's valuable to compare Morgan Stanley's PE ratio
Yes.
to its direct competitors.
Absolutely. A thorough comparison would provide more context and insights into how the market perceives Morgan Stanley's future earnings potential compared to its rivals.
Sure.
We also need to consider whether the premium reflected in the PD ratio is justified
Yeah.
based on their long-term prospects and the strategic moves they've been making,
Right.
such as the acquisitions we discussed earlier.
Absolutely. So now let's step back and consider Morgan Stanley's role in the broader economy.
Okay.
They've been deeply involved in various major financial events, including advising the U.S. government on the Fannie Mae and Freddie Mac bailout during the 2008 financial crisis.
Yeah. However, it's worth noting that they were also a recipient of government assistance
Right.
during that tumultuous period,
Yeah.
borrowing a significant sum
Uh-huh.
of $107.3 billion
Wow.
from the Federal Reserve,
Okay.
the highest amount among all banks.
Really?
So this highlights their interconnectedness with the financial system
Right.
and the potential risks associated with such systemic events.
For sure. Yet it's also important to acknowledge their commitment
Yeah.
to social and economic sustainability.
Right.
In 2013, Morgan Stanley invested $1 billion to improve affordable housing,
Okay.
demonstrating their recognition of their broader societal impact and responsibility.
Yeah. This move aligns with the increasing emphasis on environmental, social, and governance,
Right.
or
Yeah.
ESG, factors in investment decisions.
Yeah.
Morgan Stanley has taken further steps to strengthen their commitment to ESG principles. For example, in 2024, they signed a purchase agreement with Climeworks
Okay.
for 40,000 tons of carbon dioxide removal,
Wow. That's a lot.
showcasing their efforts to address climate change and reduce their environmental footprint.
So, having examined their financials,
Right.
market position,
Right.
and broader impact,
Yeah.
let's discuss the pros and cons of owning Morgan Stanley stock,
Okay.
especially from the perspective of a potential investor.
All right. So on the positive side,
Yeah.
Morgan Stanley boasts a strong brand reputation, global reach, and a diversified business model that spans various segments of the financial industry,
Okay.
providing a degree of stability.
For sure.
Their strategic acquisitions focused on expanding their wealth and investment management offerings
Right.
also position them well for future growth in these attractive sectors.
Absolutely.
Yeah.
However,
Yeah.
potential downsides exist as well.
Of course.
As we mentioned earlier,
Right.
their growth prospects, especially in terms of earnings per share, appear somewhat subdued compared to some of their peers. This might be a concern for investors looking for companies
Yeah.
with a higher potential for long-term growth in return on investment.
Right. Additionally, their institutional securities business,
Yeah.
while a significant revenue driver, is inherently cyclical
Right.
and exposed to volatility in the global financial markets.
Okay.
This exposure could lead to fluctuations in profitability
Yeah.
and potentially impact their stock performance.
Makes sense.
Their history with the 2008 financial crisis,
Right.
though mitigated by subsequent regulatory changes, might also make some investors cautious about potential systemic risks.
So now shifting our attention to income-oriented investors, Morgan Stanley has a consistent history of paying dividends.
Right.
Which can be a significant attraction.
Yeah, their dividend policy and yield have even made them a topic of discussion in articles about dividend harvesting portfolios, suggesting their appeal to investors seeking steady income streams.
Okay, in addition to dividends, Morgan Stanley actively engages in share buybacks, repurchasing their own shares from the market.
Right.
This strategy can increase the value of the remaining shares by reducing the total number of shares outstanding.
Right.
Potentially leading to higher earnings per share and greater returns for shareholders.
So both dividends and share buybacks are mechanisms through which Morgan Stanley returns value to its shareholders, making it potentially attractive for both income-seeking and growth-oriented investors.
So taking all of this into account, is Morgan Stanley a good fit for your portfolio?
Well, that ultimately depends on your individual investment goals.
Right.
Risk tolerance and time horizon.
Yeah.
As we've discussed, Morgan Stanley offers a unique blend of stability, growth potential, and income generation. Through their diversified business lines, commitment to ESG principles, and shareholder-friendly policies.
If you're a long-term investor seeking exposure to the financial sector with a balance of potential growth and income, Morgan Stanley could be worth considering.
Absolutely. Their consistent dividend payouts, share buyback programs, and strategic acquisitions aimed at expanding into high-growth areas like wealth and investment management are all positive signals.
However, if you're seeking high-growth companies with rapidly expanding earnings, or if you're particularly risk-averse and concerned about their exposure to cyclical industries like investment banking, then Morgan Stanley might not be the ideal fit for your investment strategy.
Remember, thorough research, a clear understanding of your investment goals, and a realistic assessment of your risk tolerance are crucial elements for successful investing.
Absolutely.
The decision of whether or not to invest in any stock, including Morgan Stanley, should be made after careful consideration of your personal financial circumstances and goals.
Couldn't have said it better myself.
It's also important to remember that the financial landscape is constantly shifting. New technologies, regulations, and market trends, continuously reshape the playing field. Morgan Stanley, with its expensive history and commitment to innovation, seems well equipped to navigate these changes.
But the real question is, can they leverage these shifts to achieve sustainable growth? And deliver strong returns for their investors.
That's something we'll all be watching closely.
Absolutely.
As informed investors, it's our responsibility to remain vigilant, track the company's performance, and adjust our investment strategies accordingly.
For sure.
Investing is a dynamic process.
Absolutely.
Requiring continuous learning, adaptation, and a willingness to embrace change for long-term success.
Couldn't agree more. So we hope this deep dive has provided you with valuable insights into Morgan Stanley. And equipped you with the knowledge to make informed decisions about your portfolio. As always, we encourage you to continue your research and consider your own investment goals and risk tolerance.
Absolutely. And we'd love to hear your thoughts on Morgan Stanley. Head over to our YouTube channel and let us know what aspects of their business you find most compelling or concerning.
Are you bullish or bearish on their future? We're always looking for new companies and investment ideas to explore, so feel free to drop your suggestions in the comments. Your insights help shape future episodes and ensure our deep dives remain relevant and engaging.
Absolutely.
Thanks for joining us on the Deep Dive. We'll see you next time.
See ya.